What's going on, everybody? RJ with RJ's Trades. Today I have an amazing video. I'm going to be teaching you the number one thing that really turned my trading around. All right, before we begin, if you're watching this on YouTube, make sure you like and subscribe. If you want to see more videos, check the links in the description below. Follow me on Instagram. I post free plays. I have over 700 posts of free trading education, and check out some videos on my channel here. I have a lot of beginner info. All right, so if you're on the Instagram, make sure that you leave a like, comment, and share this video so other people can see it. All right, let's get straight to it, man. The number one thing that changed the way that I trade and really made it click for me is understanding top-down analysis. Okay, understanding top-down analysis changed the game for me. All right, and I can't take all the credit for this, right? Shout out to my guy Cap. Cap showed me this in like 2020, 2021, right? So he showed me this years ago, and ever since that point, my trading just went through the roof. All right, so what do I mean by top-down analysis? So you guys know, when I trade, I use the most basic principles such as chart patterns, time frames, candlesticks, levels, things of that nature. I use the very basics. Okay, so top-down analysis, what is that? Top-down analysis is being able to look at a chart from a technical standpoint on a larger view and be able to decipher what might happen on the smaller view. Okay, let me repeat that. What is top-down analysis? Top-down analysis is being able to look at a chart from a larger view or larger time frame and be able to determine what may happen on a smaller time frame to be able to make money, right? Because that 1 minute chart is important, but it is not as important as the 1 day chart or the 1 week chart, okay? Contrary to popular belief, all right? If you can understand what's going on the larger time frame, it's going to make a lot more sense when it comes to probability on the smaller time frame. All right, if you are in my chat, you guys know that I call this looking from the mountain down to the field. Okay, when you're looking from the mountain, you can see everything that's going on the field. It's a lot harder if you're looking from the field or from the smaller time frames to see what's going on the larger view. Okay, now what basic principles do I like to use as far as using this top-down analysis? Right, so number one is time frames. Number two, love to use the levels. Number three, love to use the chart patterns. Those three things I love to use when trying to do my top-down analysis, and this is how you really analyze a stock. All right, just for example right here, we're gonna take example SPY. All right, so you guys know I called SPY last week. I said, hey, this thing might drop. It's setting up this type of pattern that lets me know that it might fall. Okay, right, so it's all about probability. All right, so when it comes to chart patterns, I seen that this was a bear flag on the daily chart. Since this was on a daily chart, that tells me that this move could happen for a couple candles in a row, right? But this is a couple candles on the daily. But you got to realize, if it's coming down on the daily, that means it's coming down on the 5 minute. So not only could this be a larger move because it's on a larger time frame, you don't have to catch the huge move. You can catch a piece of the move with the day trading and be just fine, right? So I was able to make over $1,000 day trading this crazy move on SPY, right? When you see moves like this, understand that this does not happen by coincidence. All right, why did this move happen on Friday? Because on the larger time frame, you were breaking down from a bear flag on the daily. All right, so the larger time frame gave you that confirmation and gave you that confidence to take puts. All right, what else can you add to that confidence? All right, we starting to use what's called confluence. All right, notice I said the second thing that you have to understand, and that's important to use for top-down analysis, is levels. All right, so if you guys have been trading at all the past few weeks, or if you haven't, I'm gonna tell you, 564 to 565 has been a crazy tough level for the market. All right, if you look right here, notice that we got a lot of consolidation here. Okay, but this is the thing about top-down analysis. You can go back and see how strong the level was in the past because you're doing nothing but using the larger time frames and using the past to determine what might happen in the future. Let's take a look at this same 564 to 565 level and see Was it a struggle in the past? Right here, it was a bit of a support. Right here, it was a strong resistance. Right in this area, it was a strong resistance. Notice that we're back in August of last year. In this area, July of last year, strong resistance. So this is a previous spot that the buyers and sellers had already been fighting before. Okay, so once you start to get the confirmation on the down move, you start to see it break down and it's holding below the level on the smaller time frame. That just confirms the move down. Okay, so not only could you have caught this on a swing play, which means that you hold it overnight, you could have caught this on a day trade as well and made bank. All right, now what else could you have saw using top-down analysis? You could have saw that the next level down was around around 550. Okay, around 550. Let's take a look back and see, was 550 a good point? So you know it was here. Let's go back here. We're in September. We got some action around 550. We're back in June of last year. We got action around 550. Resistance here, support here, resistance here, resistance here again, then turn it into another support here. Like, okay, so that's the level. So you knew from, if it broke down from here on the daily chart, not only is it breaking down of the bear flag, it's also breaking a key level. Okay, now how do you convert that? You convert that to money by understanding this even on a day trade standpoint. So the larger time frame, you can always trade that from a swing standpoint. How do you capitalize on a day trading standpoint? You know the level already, right? So as you see, when it opened up here, let me move. You can see that this thing opened up here at the support, bounced up and rejected and continued down. All right, but notice that it stayed down. It did not get back above this level at all, right? So you know that this is strong simply because it's already breaking down on the daily, and you can see the weakness here on the 5 minute. All right, so you're using that larger time frame to give you more confidence to take this day trade, right? It goes both ways. It doesn't have to always be a day trade, but looking at it from a day trade standpoint, even if you miss this down move, if you know your larger time frame levels, your top down analysis, you can take this bear flag setup on the 5 minute with confidence, simply because you know the larger time frame, you're well below your key level, you formed a pattern, and you have a lot of room to the downside, all the way down to 550. All right, I hope that made sense. I hope that made sense. Okay, so let's also talk about when it got down here to 450. Okay, so when it got down here to 550, I keep saying that wrong, 550, when it got down to 550, notice that on the daily, we know that this was a support, but you won't know that if you're not looking there. Okay, if you don't know your top down analysis. All right, so look what happened today. It did get below, but it didn't hold below. Okay, so there are some people that held puts that probably got killed today because they didn't know that this was a key level and didn't understand that once this thing showed it was going to hold above, this candle right here told you, hey, the buyers have stepped in at this level. But you wouldn't know that if you're not looking, if you're not using top-down analysis, if you're not looking from the mountain down to the field. All right, hope that makes sense. Let's look at one that you could use to the upside. We're going to look at XYZ, also Block, also Square Cash, also everything else that they decide to be. All right, Square Cash, XYZ, whatever you want to call it, Block. Here, fell right to a support. Look at this on XYZ, right here. 54.95 was a support here, March 2025. Support here, August 2024. Support here, August 2023. Support here, May 2023. Support here, October of 2023. I imagine we can even go further back. Look at this same area in 2018. Look at this same area in December 2018. Look at the same area September 2018. So you have a crazy key level that all you got to do is recognize what's going on the larger time frame. Not even to mention you have a setup called bullish divergence. Shout out to everybody that made money on this play. All right. And you had a crazy bounce, right? Crazy bounce up from 54 all the way up, almost $10. That's crazy. Crazy move. All right. So that is an example of how you use top-down analysis. This is what really changed trading for me, man. Guys, please take notes on this. Drop questions in the comments. Once again, if you're watching this on YouTube, leave a like, comment, subscribe. Watching this on Instagram, make sure you leave a like, comment, and a follow, and share this for your boy. All right, RJ's Trades, man. I'll see y'all in the next one. Peace.